But let's go back to Gaurav now again to get more details in terms of Axis Bank numbers. What are they looking like, Gaurav?
Well, as Axis Bank, when we look at the numbers, it looked like a mixed set of bag, and I'll tell you why. When we look at loan book growth, that was actually healthy at around 11.7%. In fact, it was higher than Street's expectation. Deposit growth that also remained in a double digit, but at the same time, there was additional one-time impact on provisions once again worth 1231 crores, and that is the reason why we saw PAT falling almost by 26%. Now let's go to basic numbers. Net interest income increased almost by 2%. We saw PPOP declining by 3%, but it was in line with what the street was expecting. But at the same time, because of higher provisions, we saw profit declining almost by 26% on a year-on-year basis. So what happened in this quarter? First is that loan book growth was strong. At the same time, net interest margins, now they came in strong. They were at around 3.73%, a decline of just 7 basis points versus Street's expectation of 3.63%. So definitely better than Street's expectation. Gross slippages due to technical impact. Now that also declined almost by 44% in absolute terms. And at the same time, if we look at gross slippage and net slippage ratio and gross credit cost and net credit cost, we saw some amount of healthy improvement. But what went wrong is that once again they came up with one-off provision, but 1231 crores, and this was directed by RBI. Now bank is saying is that this was because of the two discontinued crop loan variants, which was actually impacting the profitability. Management says that this will get written back by 31st March of 2028, or if these accounts get settled, if these accounts get run down. So management is confident about it, but definitely on the back of this, we will be watching out on how Street reacts on the numbers of Axis Bank today.
Okay, Gaurav, thank you so much for that. We'll keep an eye out on Axis Bank. But on that